You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? Mike from The Moose on the Loose. This episode is fresh from the oven. Yesterday, TC Energy spun off its oil pipeline, SalBo, into a new stock. So SOBO, that's the new ticker, SalBo. Kind of funny because the first time I did a video on this transaction a few months ago, I kept on saying SalBao. But anyways, that was just probably made a lot of Anglophone smiles, so I'm just going to say it once, SalBao, but it's really SalBo. All right, so this morning, if you have not done anything, you probably wake up and you open your broker account and you have still one share of TC Energy for each share that you had, but you also have 0.2 shares of SalBo. Actually, you had that yesterday. Maybe you didn't notice, but yeah, you now have two companies in your portfolio. That's kind of crazy, right? So long story short, we're going to go into a few details about the transaction. The first thing is important here is TC Energy did not try to hide a dividend cut in the process. Actually, 86% of the original TC Energy dividend will be paid through the TC Energy share, and 14% through SalBo. So, of course, if you're selling your SalBo shares, your dividend income will be lower, but you will have cash in your pockets to buy something else in return. So you will temporarily have a dividend cut, but that's up to you. If you keep both pipelines, then you're still good. So the idea behind that spinoff is actually to make two pure plays. One pure play on natural gas pipeline and another one on oil pipeline. So let's talk about SalBo first. That is the play on the oil infrastructure. We're talking about almost 5,000 kilometers of oil pipeline from Western Canada all the way down to the US. Actually, one of the shortest, if it's not the shortest, travel for oil from Canada to the US will go through this pipeline. The company is running a classic business model, take or pay, which means that they run with contracts on average 8 years. So showing very strong predictability of cash flow. You know exactly what's going to come up next. And regardless if the client is using or not the pipeline, they still have to pay a fee to reserve the oil transportation. And of course, if they use it, it's going to be a little bit higher. So the growth perspective for SalBo, not that impressive, to be honest. The expectation is from 2023 numbers through 2026, so for the next 2 years in this case. The company expect EBITDA to grow 2-3% a year. So it's not going to be a flabbergasting, super powered company that is going to thrive like there's no tomorrow, but it is going to be a very stable, dividend paying pipeline as we love them. In terms of cash allocation, capital allocation, which is always important, especially for capital intensive companies, the company said that it wants to use its extra cash flow first to reduce debt. So paying off debt sounds like a pretty smart move, especially because now interest rate is higher than it was 5 years ago. Even though we're going to have more rate cuts coming, chances are we're not going to go down to what we had as a prime rate back in 2020. So paying off debt, step one. Step two, reinvest in assets. Of course, those are asset heavy, capital intensive type of business. So it's just normal that they reinvest to maintain and expand their pipeline. They also plan to repurchase shares, which could help both for the dividend and the stock price. And finally, increase the base dividend. Mind you, it's a great capital allocation plan. I kind of like it. It sounds good. But when you see that expectation for profit growth is 2-3% a year, that's not so much growth for a lot of plans. So maybe that once they have done reduced leverage and invest assets, there are not going to be much money left to repurchase shares and increase the dividend. So I'm still thinking at this point, maybe we're going to get another dividend trap. I'm asking the question out loud right now. I'm not sure if it's going to happen or not, but let's just say that my expectation for the dividend growth in this one will not be that much at first. So they will have to prove me that they are that this company is a dividend grower, because in the meantime, I am definitely not convinced. On the other side, the remaining of TC Energy, like the bulk of the business, is actually looking quite promising. So maybe that's the reason why they wanted to have one play on natural gas and one play on oil infrastructure. So for TC Energy, it expects for the same period, so from 2023 numbers through 2026, a 20% EBITDA growth. 19.5 actually. So 20% in 3 years, that's high single digit numbers, which is pretty cool. I kind of like that. It is a play on natural gas pipeline across North America. So we're talking about Canada, the US, and Mexico. Again, similar business model where you have take or pay with long-term contract. And whatever happens with the pipeline, you still have to pay to get your right. So predictable cash flow, steady dividend payment, but with a better expectation of EBITDA growth. I expect to have like a dividend increase, maybe like 2, 3, 4% a year. We're going to see how it's going to play out, but it's going to be interesting. And in the mix, to make it a little bit more interesting, they will also leave Bruce Power. It's a nuclear plant in Ontario, so that will be part of TC Energy. So a little bit more play on the green side. If you're looking for renewable energy, usually natural gas has also a better reputation than oil pipelines. So maybe TC Energy will have it's going to be a little bit easier for the company to grow pipelines and get into more projects. So that could be interesting too. I expect better dividend growth also from TC Energy compared to Salbo. Personally, I do not have Salbo or TC Energy, so I'm like completely neutral in this transaction. I was not in love with the pipelines last year. I sold mine that was Enbridge actually at the beginning of 2023 just because I see just limited growth potential there, and still inflation for cost of labors, for new projects, and of course interest charges is going to wait on those type of business. So I was just like, yeah, they are good, they're not going to die anytime soon, but they're not going to qualify as a thriving business. And I just prefer to invest in thriving business instead of like going for like very stable and boring companies. I have a few of them in my portfolio, like Fortis, for example, but in general, this is not exactly my cup of tea. Doesn't mean that it's a bad stock, doesn't mean that you should get rid of it. Actually, I know a lot of investors that will be super happy with TC Energy and also Salbo. But I mean, if you have Pembina Pipeline and Enbridge in your portfolio already, maybe you would like to just get the natural gas pipeline in your portfolio and get rid of like a third oil pipeline in your book. But again, that's up to you. It's up to you to look at what's going to happen. I just wanted to highlight the transaction because, of course, I got a lot of emails yesterday. And I thought, well, it's a good timing to just make a quick summary of this spinoff. All right, Moose, that's enough for today. That was a quicker one. We're going to see how the stories develop. But if I have to put $2, I would put it on TC Energy. Take good care. We're going to talk again tomorrow for Business Friday. And until then, don't forget to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.